I want to quickly get across my thoughts as to what I think the market will do moving forward. But to really understand that, you have to understand how I got to that position in the first place. So essentially, I'm just bullish the entire way up. The trend is favored upwards, so I am bullish as well. When the trend breaks, I flip bearish. And then somewhere over here, I was screaming sideways. So when I'm screaming sideways, I'm screaming chop. It really just stems from the understanding that the market was previously trending very strongly and in both directions, really, even though typically this isn't what I would actually expect from this kind of a breakdown of this trend. I would expect something directionally proportional. So when we reclaim that region, my mind goes to one of two things. Either we are reclaiming the uptrend and we're going to continue rallying just the same way that we had for the months prior, or we're about to get really, really choppy. And then from that consolidation, from that chop, however it decides to form, from there, we will expand in either direction. This analysis stems from a very simple comprehension that the market can only ever do one of four things possibly, right? So this is a very simple 4-year-old way to think about it, but just bear with me, right? The market can only ever either go up, go down, or go sideways. And this form of sideways is a range, and the other form of sideways would be consolidation, meaning lower highs and higher lows. The reality of it is that these two things have to result in either one of these two things, right? So essentially, as long as you are not the person who is fighting the breakout of sideways once we break out in either direction, and you just kind of take it at face value for what it is, then you should be just fine regardless. That is the mindset that I'm taking on now. Been screaming sideways for the past however many weeks. April 26th is when that analysis really comes into fruition, and I start regurgitating that every single day. And as of recent, starting to flip bearish. So the writing is on the wall with things that are out of context, things like meme coins pumping and your favorite influencer creating vaporware coin to just dump on your head. But if you're going to refrain from getting too speculative, as I usually do, then you should essentially, at minimum, understand that it is just kind of 50-50, and it mostly is just kind of a coin flip. All that context stuff is usually just like cherry on top to get your bias kind of like 51-49. That's usually just the way that I think about it. Now that we've broken down, I'm allowed to take on a very clear bias, right? This is definitely not bullish price action at all whatsoever. You do not make money in markets long term by fading the expansion away from fair value. There's a couple of different ways to portray fair value. I really don't use either of these. You can use a VPVR if you like, or you could use something like an anchored flop, right? So it doesn't really matter. The concept is the same. The invalidation to that bias is only upon reclaiming and re entering that fair value region. So that's really the only invalidation to that analysis. And the context here and where it gets tricky and where most people will trip up is they will argue, but Mercury, the higher time frame, is still bullish. Yes, you are actually correct. The way that I think about it, again, it's a very 4-year-old and simple way to think about it, but it's essentially just which way is this price action headed? And you know that just as well as I do, just as well as a 4-year-old does. So we're not allowed to really neglect that price action. But the point is, if you're going to make that analysis from here, let's say, into here, that's a negative 18% drawdown. Truthfully, the market would still be bullish, even in the event that we came all the way down to here, in which case you are bullish for the entirety of a negative 30% drawdown. There are issues that we get to that negative 30% drawdown only for it to not hold and your argument becomes fully invalidated, at which point you are totally inactionable and paralyzed as to the price action that you're seeing at current day. So we need to be as actionable as possible, which means that we need to be neglecting analysis, even though it's valid if it's inactionable. So essentially, just pick and choose the points at which you're willing to do business at. And if you're stingy about those prices, then when we get there, you put yourself in a drastically better position because the tier of options that you have available to you when we get to that price is drastically better than someone who is still making the same redundant argument for the entirety of the drop downwards into a region like this where we have 25K daily demand along with the 200 daily EMA confluence, along with even the 200 weekly moving averages. The issue becomes if we don't hold that zone and we continue lower, you don't really have much of a backup plan available. You did not consider that because instead you were neglecting what was locally relevant and still high time frame trend to put an emphasis on something that was less relevant locally but more relevant on a much higher time frame, although be it totally inactionable price action. So the zones that I'm interested in are truthfully this 25K daily demand zone, along with the 200 weekly moving averages, along with the 200 daily EMA. I think that's a pretty key level to hold as support, but I'm not really putting all of my eggs in that basket of that support level holding, mostly because the context of this region is pretty significant. It is a 2 month long fair value zone. We are just now breaking down below it. It is only a measly negative 10% push lower before we get to that price. So it's not really the thing that I'm truly interested in buying. I would be more interested, truthfully, in buying something like 21.5K or somewhere along that region if and when we even got there. Mostly, it's just a kind of balance between I understand that the current trend is bearish, and if I'm putting an emphasis on that trend and I'm neglecting support levels, I'm not allowed to be surprised if support ends up acting as support and we bounce from support. At the same time, if you're the person who's only acknowledging this support level or maybe even this support level and you're totally neglecting the current trend on all time frames except for when you zoom out to something like a 3 day or a weekly chart, then don't be surprised if that support level gets totally ran over and we continue lower anyways. This price action does kind of remind me of 40K all the way back here in May, when people are arguing things that are totally inactionable. And I don't know if any of you were on Twitter at this time, but my entire feed was very adamant about buying 40K for really weeks. And then by the time that we got there, everyone started to buy because of a daily demand zone, because of 200 daily moving averages that were not relevant at all anytime recently, right? And then when we got there, we kind of just slow bled and then led to that massive capitulation straight down into the next daily demand zone. It is kind of indicative of that same thing where you do have to find the balance of acknowledging the support level as support, but still respecting the trend. And truthfully, I want to say, even though it sounds cringe and a lot of people are going to give me shit for it, as long as you're able to find the balance between both of those mindsets, you should be just fine.